Negotiations over ending the war that started when Russia invaded Ukraine have been weighing on the energy sector. The market has been pricing in that Russian crude oil and natural gas will start flowing more freely if a peace treaty is agreed. Europe relied heavily on Russian gas for years. During Trump's first term in office, he criticized Germany for supporting the construction of the Nord Stream gas pipeline connecting them with Russia. It's a great video where Trump asks, quite rightly, why the US has troops stationed in Germany to protect them from Russia, while Germany at the same time is buying gas from them.
I have to say, I think it's very sad when Germany makes a massive oil and gas deal with Russia, where you're supposed to be guarding against Russia, and Germany goes out and pays billions and billions of dollars a year to Russia. So we're protecting Germany, we're protecting France, we're protecting all of these countries, and then numerous of the countries go out and make a pipeline deal with Russia where they're paying billions of dollars into the coffers of Russia.
Sometimes things need to be said. Previous presidents should have been more openly critical of Europe's energy dependence on Russia and their low spending on defense. Both these issues have now been addressed. Ukraine will always be vulnerable to their larger neighbor. They have to make some concessions or persuade the West to provide enough firepower to push Russia back out of their country. Western democracies aren't going to support a forever war. Giving up land for peace is an awful choice for the Ukrainians who have fought bravely, but it doesn't look as if there's appetite among their supporters to go on the offensive. For energy markets, I think the idea that Russian exports will displace American oil and gas is a bit far-fetched. The EU agreed to buy $750 billion worth of oil and gas over 3 years as part of the trade deal they just signed. We all understand that they can't buy $250 billion of oil and gas from us every year because we don't even export that much in total. But it's pretty clear that they're supposed to buy more, not less. I'm sure most countries and the EU understand that any deal with Trump can be rescinded if he wakes up one day and decides to. On top of that, US natural gas is cheap. There's a huge arbitrage between the $3 per million BTUs US benchmark and the $11 to $12 that is the benchmark for both Europe and Asia. That's going to continue to support the construction of new LNG export terminals. Over time, US natural gas prices will rise as a bigger percentage of our production goes overseas, but we'll still have relatively cheap gas for many years to come. Stocks like Venture Global have been weak, even though they've had nothing but good news. They won a recent arbitration dispute with Shell and are moving ahead with expanding their Calcasieu Pass LNG terminal. But the macro outlook has offset these positive developments. Midstream energy has lagged the market this year. It's eerily similar to Trump's first term when energy stocks did poorly. There's less irrational exuberance this time around though. CapEx plans are supported by more robust assumptions and solid demand. We think midstream energy infrastructure is an attractive investment, no matter how events play out with Ukraine. If you're interested in learning more about the energy sector and interest rates, then don't forget to subscribe and follow us on LinkedIn and Twitter. Our handles are in the description box below. To find out more about what we're thinking, you can sign up for our twice-weekly blog at sl-advisors.com. If you have any questions you'd like answered in this video, then please leave them down below. I'm Simon Lack. Thank you for watching this video.